Welcome back. It's time for a business update. For that, I'm joined by William Edwards. Hello, William.
Hi, Claire.
We've talked a lot about Spain this week, but today the focus has shifted to Portugal.
Yeah, staying on the Iberian Peninsula, Olli Rehn, the EU's Economics Commissioner, is going to be visiting there later on today. But yesterday, ahead of that, Portugal put out some good news. They said they're ahead of schedule with their economic reforms that the EU and the IMF have asked them to carry out as part, of course, of that bailout that they've already received. Now, those reforms include, as in many places across the EU, putting up taxes, making spending cuts, and also liberalising the labour markets. But it's not all good news because, again, as elsewhere, in, for instance, Greece, there are worries that these reforms won't be enough to get the country's growth back in order. Let's take a look at how their GDP has been over the last, couple of years. In 2011, they were down 1.6% in GDP, and that's going to be almost twice as bad this year, it's estimated. So there are worries that a second bailout might be required. We'll be hearing more on that later in the day.
All right, we're going to move on now to another struggling EU economy, Hungary. On Tuesday, European finance ministers voted to cut development money for the country as punishment for not meeting its deficit reduction targets. While its government has accepted the move, some have questioned why countries within the Eurozone haven't received similar treatment.
The country may lose nearly 500 million euros in development aid. European Union finance ministers voted on Tuesday to sanction Hungary if it does not take measures to bring its deficit below the EU's 3% limit.
This provides a strong incentive for Hungary to conduct sound and sustainable fiscal policy. Effective action by the Hungarian authorities in response to the new EDP recommendations will lead to the lifting of suspensions before they become effective.
The warning to Hungary's government is clear. Cut the deficit or we will cut funding. The Hungarian Deputy Prime Minister remains hopeful that his government can find a solution.
Our goal is to resolve as many ambiguous situations as possible. We want to create an atmosphere of trust between Hungary and the three institutions, the IMF, the EU and the European Central Bank, that ensures a relatively quick start to the talks and possibly a quick conclusion as well.
The decision came after a tough debate between finance ministers. It is the first time the EU has sanctioned a country for going over the 3% limit, despite the fact that 23 of the 27 countries in the EU have exceeded the debt ceiling in the past. Some argued Hungary is being unfairly singled out as an example, but the final decision was for stricter enforcement of EU laws. There have already been protests in Hungary over the current economic crisis, and further government cuts may exacerbate Hungary's economic woes.
We're going to stay on the Eurozone debt crisis and talk about Greece now and some good news.
Yeah, you could see it that way. Fitch, the ratings agency, has upgraded them by one notch to B-. That's the first time Fitch has upgraded them since 2003. And of course, since the beginning of the financial crisis, the debt crisis, Greece's rating has fallen through the floor. So it has been downgraded to junk status by all of the agencies. So they do cite, though, that there are significant and material risks of default that remain. So, I mean, it's not all good news, but you could optimistically say that it's perhaps at the beginning of the light at the end of the tunnel.
Right, now we're going to take a look at the markets. They've been looking pretty good recently, particularly in the US.
Yes, this has in fact been a very optimistic story. We've of course seen good employment data coming out of the US in recent weeks and months, and in trade yesterday we saw the highest close of the Dow Jones since 2007, the highest close of the Nasdaq since 2000, not long before the dot-com bubble burst. Quite a way off that peak, but nevertheless positive figures there, as you can see. That was helped by the news that the Federal Reserve will keep its interest rates at a historically low level that we're seeing at the moment, and also, like I said, along with those other positive figures on jobs, that has helped boost things. Similar story over in Asia. In today's trading, the yen has weakened against the dollar, which has helped is expected to help Japanese exporters. And Sony, for instance, up 5%, Nissan up 4%. But the Shanghai Composite down there on comments from Wen Jiabao and the end of the Communist Party conference in Beijing, which we will hopefully be talking about a bit later on.
All right, moving on now to news that Total, the oil company, has a new big investor.
That's right, and that investor is Qatar, the sovereign wealth fund, one of the many sort of big new players in the world. Qatar at the moment really expanding on the diplomatic front as well as on the business front. They've taken a 2% stake in the company, which doesn't sound like very much, but it does make it, it's thought to be around the third largest investor in Total, the French company, the same size around their investment as that by the Chinese state investment firm. So big firms from the Middle East and Asia snapping up parts of a major French oil company.
We're going to stay with company news, moving on to Audi. It seems it's going shopping.
Yeah, and what it's looking for is motorbikes, in this case Ducati. Now, BMW, Audi's big rival in Germany, has long had a motorbike division, and Audi, it's thought, are looking to compete against them on that front as well. Ducati, of course, makes very expensive and high-end and very quick motorbikes, and Audi want to get in on that segment. The Financial Times reckons they'll pay around 850 million euros for the company if the deal goes through. It's Volkswagen, of course, that owns Audi in turn, and the chief executive of Volkswagen said, when asked about the company, that he likes everything in red, and Ducati does have red fuel tanks traditionally on its motorbikes, so that's seen as a sign that perhaps they are going through with this.
Right. Okay, we're going to talk technology now, because it seems that DVDs might become a thing of the past, or at least if Walmart gets its way.
Yes, well, I mean, we've been talking about this for a while with services such as Apple's iCloud system, the iTunes Store, etc. Netflix, of course, you can get movies online. But now that Walmart is getting behind this sort of idea, it does show that it's really becoming mainstream. What they've done is they've come up with an agreement with 5 major Hollywood studios, which will allow you to copy your DVDs essentially onto the internet and watch them anywhere on your tablet, computer, on your phone, on your laptop, wherever you are, you'll be able to access the movies that you've bought on DVD on the internet. This is, of course, part of a wider trend. As I was saying, Apple has a service, but they don't have 2 major studios, Fox and Universal Pictures. Walmart has got a broader range, but they still don't have Disney on board, so this certainly won't be the end of the argument yet.
Okay, now we're going to talk about rare earths. So you might not have heard of them, but you can find them in iPads, a lot of technology products, as far as I understand. And they're now at the centre of a trade spat between China and some of the other leading economies in the world.
That's right. They include scandium and yttrium, which you may not have come across, like you say. But they are essential, not just in consumer electronics, also, of course, the latest weapon systems, things like the latest US fighter jets. So a very political material. And China produces 95% of the world's output. The US, Japan and the EU, however, have accused China of limiting exports, and they're taking it to the WTO, the World Trade Organization, over this. We're joined now by Shannon Van Sant, our correspondent in Beijing, to tell us more about this. Shannon, what has China's reaction been to these accusations that it's fixing the amount that it exports of these materials?
Well, China, of course, is defending its actions. It says that it's cutting its quota for rare earth minerals because of environmental reasons. It says it wants to improve the local environment here. And cutting the quota, of course, does represent real advantages for China and increases the profits for some of the producers here. It also might require foreign firms to relocate to China to have access to these rare earth minerals. So there are some real benefits to China. It's cut its quota to 30,000 tons this year from 39,000 tons a few years ago. And one thing to keep in mind as well, that as Obama is making these statements about China and rare earth minerals, he's also facing an election year and potentially pandering to his base in the United States by making strong comments about China and its trade policies. So, and one last thing as well to note about the rare earth minerals, they're actually not that rare. And so by cutting its quota, by restricting access to rare earth minerals in China, China could be shooting itself in the foot as other countries around the world are forced to mine their own rare earth minerals. So if China had kept its quota high, then it potentially could be a really profitable natural resource here in China. So we'll have to see what happens.
Now, Shannon, as we mentioned in the news, Wen Jiabao has been talking about changes that will be needed to changes to the Chinese economy. What is it exactly that he said on that front?
That's right. He basically has called for economic and political reform. He's also made some interesting comments about the currency. He said that the Chinese currency, he pointed out, has appreciated 30% since 2005, and he says it's close to reaching equilibrium, which means that could mean that the yuan will not appreciate that much more in the near future. Now, that could increase tensions between China and the West, of course, which is counting on currency reform to boost local economies in Western countries. But also China is facing internal problems. It's facing a slowing economy. It's lowered its targets for economic growth to 7.5% this year. It's also combating inflation here. So China, through perhaps decreasing the rate of appreciation for the yuan, is potentially trying to stave off a hard landing for its economy and try to have a slow landing and a soft slowdown for its economy this year.
Shannon Van Sant, thank you very much for joining us from Beijing. And that's it for our Business Bulletin. Thank you very much, William Edwards. And thank you for watching. Stay tuned to France 24. All the latest headlines in just a few minutes with Stuart Norval.